Energy stocks are all the rave right now, and for good reason. Oil and gas companies have absolutely been the best investment of all of the sectors over the past year and a half. And if you're looking at the big names, ExxonMobil is probably standing out to you, and for good reason. We've talked about it here on this channel about why it's an energy stock you may want to be looking at buying right now. I'm Jason Hall. This is The Smattering. I got Tyler Crow here with me. Tyler wants to talk about Valero and why it actually might be a better stock to buy in the energy industry right now. Hey, Tyler.
We're talking oil, Jason. I'm so excited for this. I love talking oil.
You figured out how to invest in this area that's very cyclical and why it can be really challenging, and the boom and bust cycle that happens that can turn great gains into big losses really quick. You've done a great job of helping figure out how people can navigate that. I think that's one of the interesting things about Valero. But before we talk about it, the Motley Fool can help you be a better investor. If you want some free stock ideas from the Motley Fool, go to our link, fool.com/thesmattering, put in some information, and you're going to get some great stock ideas. Okay, Tyler, let's talk about why Valero stands out to you.
Valero is the company that is almost like the hedge against the cyclicality of the oil and gas business. Refining itself and the retail, all the aspects of it, it's the value add portion, kind of the additive manufacturing part of the oil and gas business. You have an input price, you have an output price with, the prices of, your refined products, gasoline, diesel, whatnot. And even through the cycle, the margins on these can be made. They're pretty consistent throughout. And at the same time, it doesn't take significant amounts of capital allocation or a lot of capital spending to keep these businesses running. If you own a lot of the, refineries have been around for 30 years. They maintain them, they keep them running well, they do some expansions on them, but you're not having to go out and discover new reservoirs every 5 to 10 years to replace your dying reservoirs like you have to do either as an exploration company or as an integrated major.
Right.
Now,
they sit in that right place in the value chain where instead of being the one that's spending the money to produce the resource and being kind of naked exposed on a lot of that production to whatever the market wants to pay for it, they're a buyer, right? So they're buying oil, and the product that they manufacture from oil is mostly tied to the indexes that they're buying at. So the really good refiners can create even more margins, and that's kind of how they're protected again from the ups and downs of the cycle, right?
Exactly. And, as a fantastic operator in the business, Valero has some of the lowest per barrel operating costs in the business. They, tout themselves on being really good acquirers of cheap oil. The prices they pay tends to be slightly below what you see as West Texas Intermediate or Brent crude. So, little things around the margins like that when you're refining millions of barrels of oil per day really matters.
A few percentage points here and there turn into
exactly.
really big margin dollars.
Exactly. Now, in the next few years, let's say that we are in a very good oil and gas market. Next few years, high oil prices because of a multitude of reasons. I mean, we've seen it with ExxonMobil and all the other exploration production companies. Their results 2022 were fantastic. Maybe we get a few more years like this. We don't know. Maybe not. And that's the uncertainty of it. If it's going to go great, Valero, by comparison, won't look as good because, like I said, it's just a consistent grower. It's not going to do anything to blow your mind in any given year, but it's just going to be a very consistent company that throws off a lot of cash, pays a good dividend, and buys back loads of stock. I think over the past 10 years, it's bought back 27% of shares outstanding. So great ways of just adding value over the long term and compounding your wealth. Now, we're talking about valuation too. One of the reasons this kind of looks great too is, all these oil and gas majors, valuations are starting to tick up. You can't really say that about Valero right now, right? As of right now, it's got a price to earnings ratio of 4.6 times. So it's not like the market is putting a huge premium on it, whereas a lot of these other companies where, money is flowing in because people are being like, hey, oil looks good. We should be getting things that are tied to the price of oil these days.
ExxonMobil is still a great business, maybe starting to get a little bit stretched with valuation, probably still going to do well for investors over the long term. But if you're concerned about the volatility of the markets and you really want to still own a really high quality business, Tyler's pick is Valero.